Hey everyone, welcome to today's Steady Trader YouTube Live. I've got something really cool for you. Let me switch the camera around. I'm here in the beautiful mountains for a long weekend. Look at this, the color of that lake. Absolutely gorgeous up here. So good to clear your mind for a few days and really just kind of chill back a little bit. But I wanted to go through something today. I received an email yesterday from a client that was asking me if the stock of Netflix was now toast. And the reason the person was asking the question is because we took profits on a swing trade we did. And I'll show you that trade here in just a few minutes, or actually in just a second. But the funny thing was I then followed up with the person, and what he was confused on was he was confusing trades with sort of a longer term horizon. So this is one of the most difficult things I think for people to understand. So I wanted to kind of take you through this, and let me flip the camera around. Again, have a quick look at that view. All right, so let's have a look at the computer here. And what you can see, this is the long-term chart of Netflix, or at least a multi-year chart. The stock company really hasn't been around that long. But obviously, this is one hell of a chart, and some people are getting a little bit concerned about the steepness of that slope and all that stuff, which certainly is understandable. What we did earlier this week, we bought the stock, I think at $333 or something like that on sort of when the stock started to before it started breaking out, and then we had a profit target at $350, which we took, and it was just a trade. That's all we were trying to do. So the trade alert that we had sent out to people was this exact thing. You can see we bought it at $333. We closed it then at $350 here for profit a little more than 5%, making 5.1%. But what this person didn't really understand was that just because I took this trade, it didn't mean that I needed to all of a sudden become majorly bearish on a stock. And I think that's one of the most difficult things for people to understand, to differentiate between a long-term view and a medium-term view. And the way that we do this for the most part is by having positions in different time frames. So I actually own Netflix for the long term. We own it in the portfolios, and I still think it'll be a good buy, for the long term if you have enough patience. But that doesn't mean that you can't trade around it in the near term. So let me go like this. So it's really important for people to understand that just because you're doing a trade, that doesn't mean that you have to be all of a sudden bearish on a long-term position when you get out of that trade, and vice versa. Just because you're buying a stock doesn't mean that you have to be super bullish on it or immediately in any time frame for that matter. So yes, of course, I do have my immediate term concerns about Netflix, which is why I took profits. But by no means does that mean that I think that the stock's now going to fall apart and is toast. And this is a great question by Jeffrey K. And so thank you for that question, Jeffrey. We had a lot of people that made a lot of money. We made, as you saw, a quick 5% in the trade on the swing trading perspective with the stock. And I think we made, I want to say 40 or 50% using the options that we offered one could buy. So anyway, guys, I'm going to leave you with just a little bit more of this absolutely fantastic view. I wish everyone a wonderful long weekend, at least those of you that are going to take Monday off, because U.S. markets will be closed on Monday. So with that, have a wonderful weekend, and I'll see you guys next week. Take care.